Good morning, guys. We're going to cover some stock market technical analysis. I like to approach the markets from a little bit different perspective than a lot of guys on YouTube. So I think if you pay attention, you might find some value in this video and add it into your own investing or interpretation of the markets. Everything here is my opinion, not trading advice. Let's get right into the markets. So I was thinking about what I wanted to talk about today in today's video because the markets have been grinding higher. There's not a lot of action, pretty tight ranges. It's just kind of this steady grind higher. And so what I wanted to cover is this broadening wedge pattern. And we're going to talk about that. I want to point out the things that you should be watching for. And then we'll look at a couple trade ideas and some individual sectors. All right, so with the S&P 500, the broadening wedge pattern. This green line represents your 2009 lows. It goes all the way up to your bull market. I've covered this trend line in a lot of my videos over the last year, and I wanted to point it out. You know, basically the point is we broke the bullish trend back in 2018. That's when I started the channel for the most part, was right around 2018. So I have been bearish for the most part in this entire channel's existence, longer term bearish. And that's because we broke the bull market trend. So now it's just this topping pattern that we're seeing where we're just topping out. This is what it looks like. I think we're heading in, I think all the rallies, the point is, because we're below trend, I believe all the rallies that we've gotten over the last few years are bear market rallies. I believe that we want to start a bear market, and you have to move away from the traditional sense of down 20% is a bear market. That's not how this market, now that the Fed's involved and they're pumping all kinds of liquidity, you're not going to see down 20% and that's your bear market. Swings are going to be a lot larger. The range is a lot larger. So that's a lot of opportunity, on the downside and the upside as well. But, throw out the traditional sense of a bear market. Okay, so this is the weekly chart, and there's your bear market. It was broken back in 2018. Then the Fed stepped in, that created the rally of 2019. Then we came back down again in 2020. Then the Fed stepped in, it created another rally in 2020. It's just repeat, basically. But the point is the natural forces in the market want to sell off. The market broke the trend. They want to sell off. The unnatural forces, like the Fed, is what's keeping the market up. People say don't fight the Fed, but don't fight the natural forces of the market either. Don't fight the market, I guess, in general. And the bigger picture, the market wants to go down. 2018, it wanted to move down. 2020, it wanted to move down. The Fed is trying to everything they can and throwing everything they got at the market to keep it propped up. But the market wants to sell off naturally. And that's because each one of these moves is pretty much, is a move. I mean, obviously, this is the pandemic move. And this move here is the Fed hiking rates, too much move. But this is what the market wants to do, and the trend is no longer intact. So this rally that we've seen, and the thing is, look at the rally. We've either started a brand new bull market, which is possible, but not probable, or we're just seeing a rally in what is going to be proven to be a bear market, and this is going to be a topping pattern. So what to look for? All right, so let's narrow it down and look for kind of where we're at right now. Let me adjust this. I had to adjust it to get a nice clean view on that chart. Okay, so here's the daily chart, and here's the top of the broadening wedge. Right now it's sitting about 363 on the SPY, so 3,600, 3,650 on the S&P 500. So everybody sees that, and that's major resistance. When everybody's looking at us at the same level, I mean, I've heard everyone talk about targets of 3,600, this and that. Yeah, that's logical because that's where this major resistance, this topping pattern is at. But everybody sees it, so we're either not going to get there or we're going to overshoot it. So we could easily pop through it, overshoot it, suck in the last bulls. That would be a very bullish event, to overshoot it. You would say, okay, this broadening pattern has been negated. We're moving higher. We are starting a new bull market, and then fail. Or we don't ever get to it. Everybody's waiting for it. Everybody's long. Everybody thinks that we're going to continue moving higher up into this level. And then maybe we get a rejection or a correction. Maybe we just don't get there. So that's something to watch for. And what I'm looking for as kind of a telltale sign is to look for some of these high-flying momentum stocks like Tesla to start to fail, to look for the momentum to start to bleed out of these things. And when the momentum on these start to fail, that could be a telltale sign that the momentum in the broader market is going to follow suit. So, that's just something to watch for. Just I wanted to point that out. Some other high flyers like Nvidia. You can see the chart here. Here's your hourly chart. We've just been moving higher, creating this bearish falling wedge, bearish rising wedge. And as I scroll up, you can see we're right at resistance. It's struggling here. It keeps rejecting. We popped it the other day, and it failed in this hourly candle. Here's a back test, and here again, we popped it today. We're back below it. So it's struggling. So if, this is at resistance, and this is actually an objective area to potentially short Nvidia for a move down to the bottom of the wedge and then a break. Doesn't mean you're going to break here. We could test the bottom and then run up and run higher above. You don't know what it's going to do, but it's an objective area, so I'm looking at that. Okay, and let's cover this volatility, UVXY. I pointed this out 2 days ago, back when volatility started to ramp up. Looked like it was going to break out, and I was pointing that out. And I took the trade, and it broke out and made a run from the breakout. It's up about 16%. I was watching the market, and I could tell this wanted to start to run higher. So I actually started buying it before the breakout, but I'm no longer in it now. But it was, about a 20% gain on that trade. Now, I don't take large positions in these because volatility, this can run. You can go, when you go back here and look at the daily, you can see that, when this wants to run, when you get a breakout, this thing from the breakout here, this was your actual breakout right there. It ran up about, if I can see that, about 900%. So you don't have to take a large position in order to make a large amount of money. And in my opinion, you don't want to take a large position because it can go the other way equally. You can go the other way 900% as well. But it broke out. Now, what I'm expecting it to do, if I zero in here, is kind of the same of what it did last time. It broke out of a wedge. So here's your wedge right here, going back to the spike here in March, and it created this bullish falling wedge, and then we broke out right there, and we broke out, and I'm expecting it to do a back test. So if I narrow it in here, you can see we're starting to come back down to it. So I'm expecting it to back test around 980, and I might look at buying some there just a little bit. I kind of nibble on this as it hits support levels. If it breaks below this, then that was a false breakout, and it might want to run all the way to the bottom of the wedge around 14. So that's a very high possibility. There's a probability there that we have to look at that. But it is a breakout, so you got to take a breakout for what it's worth. So I'm looking for a back test to establish a position. Again, I took the breakout initially. It popped up. I sold it, looking for a back test, and I'll reestablish the position. If that fails and it breaks down and it's a false breakout, I'll cover and buy it down here at support. That's how I'm trading this one. Okay, quickly scroll through the fangs because these are the most important thing that's keeping the market up. So we'll just do a quick scroll. Uptrend here. We've been trading above an apple, above the uptrend. Just kind of hanging out up here. Nothing bearish, nothing to do there. Microsoft, same thing. You've got this uptrend from the lows here. We had this other trend line here, but we're going to go ahead and take this one away. We'll just use the benefit of the doubt trend line. Moving higher, just consolidating up here, nothing bearish. Amazon, same deal. Above trend, hanging out up here, nothing bearish. Google, same deal. nothing bearish. All right, so that's pretty much the only ones that really matter. Let's look at the sectors. XLV. We broke this bearish rising wedge. We broke it, but it's just been sideways on the hourly chart. So just consolidating sideways, nothing's broken down. So it's just not the best signal. You know, you want to see some sort of impulsive breakdown, and we just haven't seen it. So as of right now, you know, it's not necessarily bearish yet. XLF. Okay, so this is the one I pointed out that they were going to probably try to do a recovery job. Here's your trend line in XLF. And as I zoom in, I mean, we broke down, broke trend line, back test once, back test again. We're just kind of hanging out right up here. We haven't clearly rejected, so they're probably going to hold it in this area going over the weekend. They might even pop it up and close it right at support/resistance. Leave you guessing whether this was a false breakdown or not. As of right now, it's a breakdown and a back test. We have not recovered that trend line, but you know, the rest of the market hasn't broken down, so it has a high probability of being a false breakdown. All right, let's look at gold and the dollar, and we'll probably wrap up the video there. All right, gold. So yesterday was the Fed day, and a lot of people point out in the comments that the Fed is going to let interest rates, or they're going to, you know, keep interest rates low, let inflation run. That should be bullish for gold, and fundamentally it is bullish for gold. But here's the thing. All that information that the Fed just confirmed was already priced into the market. I saw several YouTube videos on CNBC talking about what the Fed was projected to do and what they were projected to announce. And the Fed announced exactly what was being projected. So the market knew about it. The market priced it in. And that's why, you know, when yesterday you didn't see a real reaction in the market. Here's the SPY. If I look at the daily, you know, here's yesterday's action. There was just no real reaction. The market has basically already priced that in. So that's why, you know, the outlook for gold hasn't changed today, at least from my perspective, which is short-term bearish, longer-term bullish. Well, that means that I think gold is going to correct down to the 1790 level. And if I go to the daily, you can see, or actually on the weekly, you know, here is former resistance around 1790 back in 2011 to 12, and we overshot it here. Here's the overshoot, and I think we come back in and test that, you know, test it as support. When, you know, it needs to be tested, and doesn't mean it has to be tested here and right now, but I think there's a high probability that it is. And so I'm watching for that. And the move up today doesn't change the fact that it's just consolidating, trying to decide where it wants to go. If you look at the daily, there's no, you know, we're not outside of the consolidation range. There's nothing, you know, that's really changed. We have a breakdown candle here. We haven't even back tested that breakdown candle right there. Got a breakdown candle here, haven't back tested that. So we're just in this, you know, in a flagging pattern. To me, it looks like a bear flag, where maybe this is the flag, or the flagpole. You've got the flag here. This is a rough estimate, basically. And then, you know, you'd make a move down, and that would put you in the range of 1790. So maybe you overshoot, maybe you undershoot, I don't know. But I think that's where we're going in gold. So I look at the gold miners, and I continue to short these things. And here is Barrick Gold. You can see I've got this little resistance line here. They've overshot it, starting to come back in, maybe tested as support. We'll see how this plays out. But I think Barrick ultimately heads down to, you know, 25.95. And then I've got some other levels down here at 24, you know, about 24.75 and 22.50. And then one way down here. I don't think we're going to get down here, but I would say 22.50 there's a probability to hit that. Higher probability, obviously, for these levels. What I'm going to do, how I'm going to trade it, I'm going to watch gold bullion. If gold bullion sells off and these miners, you know, we get down to that 1790 on gold bullion, and the miners have, you know, maybe they've already had their sell off, I'll kind of see where they're at against my support levels and evaluate that trade as it goes. PAAS. You can see they gapped it up and started to run higher, getting a little bit of a pullback here. But again, same thing, still within, if I look at the daily, still within the consolidation range. So PAS, here was an uptrend. We broke trend. We're getting some, gyrations. Things don't just usually completely fall. When you break, you're not going to just go straight down. You're going to have little shakeout moves along the way. So you break, you sell off. This was an impulsive breakdown where you gapped down and sold off. Kickback rally 1, kind of kicking back here. But, if it stops here, that's a lower high. So here was your high, lower high. Look for a lower low. And that's what I'm watching for. I've got some price levels, 30, 22, and, it's about 30, 50, and 25, 80 or so. Those are my levels to take some profit on. And that's really all I got for this video. Just watching some of these, watching the market and, waiting for some sort of big movement. But until then, we'll just evaluate what the market's telling us today. Give me a thumbs up if you find value in the content. Leave a comment below, and I'll catch you on the next one.